In this video we are going to explain one of the most important features of an imbalance or an impulse. This term is called consolidation away, and let's explain it because this is key. This is mandatory for any impulse to become an imbalance. So let's take a look at the charts and explain what we mean with consolidation away. We have already learned how to draw a trend line, so we are going to connect the latest two trend lines. So we've got this one over here connecting this peak and this peak, so the break of the trend line creates a new imbalance. So in order for this imbalance to become a valid area of demand, we need the impulse needs to consolidate away, and by consolidation away it means that there has to be a candle, full candle, with its high, its close or open or close, and the low gravitating away, consolidating away above the proximal line of that impulse. So this is not the candle that consolidates away, but if we look right, we've got this candle that is the candle that gravitates away, consolidates away from the proximal and distal line of this area of demand created down there. So this is the candle that makes the imbalance valid. We have a bearish bias on the weekly and on the monthly and all that, so we are not interested in looking to go long unless there are some scenarios that happened as explained in the rules. But here, as you can see there, we've got a lower low here. We need to update the trend line. Forgot to do that. So the result is the same. So that was here lower low, so we've got a peak and another peak. Those were the two previous peaks. We have to start always at the bottom, and here we have the latest two peaks. The result is the same. We've got an area of demand that has been tested, and now we have broken lower. So since this area of demand has been eliminated, we've got another area of supply here. So in order for this area of supply to be valid, every imbalance is made of an impulse, but not all impulses are imbalances. In this case, we've got the previous area of demand eliminated. So in order to have an imbalance, we need that the impulse responsible for eliminating the imbalance consolidates away, and that means that we need at least one candle, one full candle like this one at the top, staying away, gravitating away without pulling back to the origin of the move before it consolidates away. So imagine that we have a candlestick like this at the end of the week, still 4 days left for Friday, today's Monday. So imagine the candle goes like that, or even smaller, we don't know, like this. One single candle. Then that would mean that this candle is responsible for the break of this. So we have to locate the origin of the move, and that is the bearish impulse that did consolidate away with this candle, and thus, for that reason, this is supply. Okay? So the same thing over here. Let's take a look at another example. Euro, Norwegian crown, Swedish krona. So this is what we have right now over there. Let's take a look at daily, for example. We've got here on the daily, if we look over here, we've got a peak and then we've got another peak, so we can draw the trend line like that. So that trend line break creates a new imbalance, that one over there. So in order for an imbalance, for an impulse to become an imbalance, it needs to accomplish the break of the trend line or an opposing area of imbalance to be eliminated. We need consolidation away. So this candle does not consolidate away, but this candle, this one, and this one, and this one, and this one, and this one are the candles that gravitate away, consolidate away from the proximal line of that potential area. That's what we are looking at. We want price staying away from the proximal line as much as possible. We do not want price to return to the origin of the move on the next candle. That would mean price is at balance. So we go back now to the euro dollar weekly chart. We are going to see the picture of balance on that weekly chart as well. Let's take a look at the weekly here. As you can see here, we've got a drop and then a rally. Okay, same thing over here, drop rally without consolidating away. Here we've got the same thing, drop rally without consolidating away until it happens over there. So imagine now that on the weekly chart today to this week, instead of having a bearish candle like that, we've got a candle like this. So, and this ends up like a bearish or a bullish candle like this. Let's make it blue or green better, which is the one that I'm using. So imagine the candle ends up like this, green, sorry. So it would end up something like that. So this means that this drop would become, instead of a drop base drop consolidation away retracement, it would become like a drop base drop rally. The same strength could be available on the bearish impulse and the bullish impulse. Having a movement like this, bearish and then bullish, means that price is at balance, that there is no consolidation away. We need price to rally, and then creates one or more candles away from the proximal line, or if it drops, away from the proximal line for supply. This is a picture of no consolidation away. This is the picture of no consolidation away, and this could also be that picture, but we need one more candle. So if this candle, imagine that today was Friday 2nd August, and price closes right now. Then we would have a new level of supply responsible for eliminating the previous area of demand. But if before the next Friday, the 2nd August, today is the 29th July, still 4 days left for the quickly candle to close, and this applies to every single time frame. This is the weekly candle, the same applies for the monthly, 3 months, and all that. So if before the week closes we have price retracing all the way up there, it is not good. We cannot go short nested areas of supply there, as will be explained in further lessons. Consolidation away is one of the most important rules, together with the strength of the impulse, the departure. So do not ignore it, because it is a very powerful rule you need to pay attention to every single time you look at an impulse.